Started the recording. All right, family, so let's get it. Now, if we look at British pound yen, we're going to take a look at the British pounds. And basically, my breakdown, I did give a heads up to the previous students in the Trap House group that took my course back in the day. And I'm actually revamping and changing things up. It's much more simple now. And, you know, compared to what I was doing back then, you know, so we'll just take a look at this breakdown of British pound. So we see that GJ has been rallying up in an uptrend. Then what do we see here? We see that it comes to a institutional key level right here, called it's 157.500. And for people that don't necessarily know what that is, that's quarter theory, very important levels of institutions to look at. So you see you have a whole number 150, you have a quarter, you got a half, and this is another quarter number. Now notice here, GJ breaks this significant level right here. And then it does one more tap up and cuts that recent high. Now, okay, you see it kind of touches this as a support. So I was looking at this and I'm saying, all right, that looks like a possible peak high where reversal can take place. Now, how do I determine that, right? So what we're going to do, I'm going to put that there. And notice right at the same time, this cut this high. If we look at British pound, Swiss, look at what took place on British pound, Swiss. So this here is like a high resistance that has been broken. And they also come above a quarter theory key level at the same time. So we see, look, if you look at the hard right edge, you see that this is a bullish signal with the wick on the bottom. And you see they come above the key level, which looks like it induced and trapped buyers. They even closed a 4-hour candle above that specific level. Trust me, that is not random. And then you see what takes place. So it looks like people at first were trying to sell at this resistance. Okay, so you see we have here, this is like a resistance level here. Oh, wait, I forgot, I gotta put it in here. See that? And then you see most people probably trying to sell this M pattern at this resistance. And then we see what took place here was actually a stop hunt, okay, of sellers. Stop hunt, trap. All right. And then what we're gonna do is, let me make that a bit smaller so I could fit that in there. Notice at the same time, what do we see, family? Right here. When GJ cuts this high above a quarter theory key level, which is 157.500. And if you want a video on the key levels, just let me know. I give that out as well for free. So we see here a high has been broken. But what do we also see? British pound Swiss, that's 1.27500. Another. And right at the same time, when British pound Swiss okay, right at the same time, British pound Swiss breaks a high above a key level, GJ does the same thing. So we could determine based on looking at, and this is pretty late, I'm sorry, but I saw it live, but I was going to do it at an earlier time, but my alarm clock didn't wake up. I entered the trade and my alarm clock didn't, so I'm pretty late, but this is good, still educational. And I think these moves, again, this could be a good sell for a while because they've trapped buyers. Okay. You see, no problem. I'll just, I have a video on those key levels. All right. But all right, now watch when we go to British pound USD. We kind of see the same thing where British pound USD breaks a key level as well. But watch, I'm going to find an even better example at the moment. So when you go to British pound Canadian, check it what British pound Canadian does as well. British pound Canadian does like an M formation. Now, I don't know how the Canadian dollar would affect this movement, but what I do like is how it also broke above that key level, showed a bullish move, and hit and broke that high. Okay, I do like that. And that did show pretty good correlation in the sense of British pounds, London open were all breaking highs, getting buyers into the market. And it looks like stop hunts as well. So we see here, again, cut the high above a key level, cut the high above a key level. And then if we look at Euro British pound inverted, look at Euro British pound inverted. I do like how, one, you could see it's pretty much been in a downtrend, and then it did this bearish engulfing right here, which would definitely get sellers into the market. Almost look like a little M pattern, which does show an inverted type of correlation for the British pound. So if you're trying to sell your British pound, you're trying to buy the British pound, which then they worked off the low. And I do think that they are going to continue up for some time. So what we're going to do is here, I'm going to also put this right here. And what I'm going to do is I like to just circle that. That's a good induction candle right there. Bearish engulfing and how they worked off the low. All right. Then I think even if you looked at what it was, not this. Those are different. So when we go to British pound USD, similar thing where it does break above that, but I liked the correlation between these four right here. So I'm looking for a sell on British pound yen, British pound Swiss, and British pound USD as well. You see, so the reason that is because this breaking the key level, cutting the high, people are buying, breaking key resistance key level, people getting stop hunt on the sell of the M, people started buying. It's the only reason it's late is because I woke up, doing the class pretty late, but I caught it at the high. And then here on British pound Canadian, we have where this also looks like an M stop on induction on the key level right there. And Euro British pound. So based upon this, and I like the bearish engulfing. Where I still am expecting movement down, still expecting it may retrace up here, and then still expecting this to come down. You see a retrace here one more time, still expecting that to come down, maybe a retrace here, expecting that, something like that. All right, so I'm currently have shorts on British pound yen and British pound Swiss. And Eric, I see you sent a markup here, and he has Euro Canadian. There go the trend line trap. Beautiful. There's a trend line breakout, 30-minute chart. Good job, brother. So you see, family, so yeah, I'm mainly on the 4 hour. I just catch peak formations, highs of the weeks and lows of the weeks. Was trapped on this one. Oh, what, for British pound or for Euro Canadian? Well, hey, you got a good example just now. Because that's something that, I teach too, trend line traps. So here's what I speculate for GPP bank manipulation today. That the market maker is trapping buyers. And he may be shifting away. Like, for example, so when you see this take place, family, all of them, like at least 4 crosses of 4 to 5 crosses of the British pound. When we look at British pound USD, slowly climbs up, right? Breaks above this key level, continues up. Okay, we do have a wick right here. This wick may be filled. So when we see one, British pound Swiss, break that resistance, break that key level, got buyers in. British pound yen, break the key level, cut the high. Okay, but at that point, it got buyers in, right? And then when we look at this, I think this is just a pullback and it may continue down. I have to look to see if there's Canadian news or if a Canadian could affect that, because this is British pound Canadian. And then we have Euro British pound. Well, I definitely think it's going to could rally up, and that they trapped sellers here on this bearish engulfing right here, and they work off the low, because again, this bearish engulfing worked in sync with this bullish move up. Okay, right on GJ. So what this terminology is called, if you know about things like the market maker method, is the market maker is setting what we would call a peak formation high, and it's shifting against the trend. It could be for a while. It could be just where, for example, they could just drop down to this next key level. So let's say that the hedge funds and institutions, they want to buy, but there's too much buyers in the market. So if you have millions and millions of dollars, you need people on the opposite side to lose to fill that order. So we may see the banks or a big hedge fund, they may drive price down, right? Possibly this is just a scenario. They could just drive it to here, could just drive, I don't know exactly how things will change, right? But let's just say for educational purposes, what they usually do is they'll set a peak formation high and they'll move off away, changing the trend. And they will get people to sell, 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 sell. And let's say they may come down here, trap or under this key level, all right? May even touch it as a resistance or something, right? And then when they have enough people selling, convinced that the trend has changed and is selling, if the banks are truly buying, right? When they have enough sellers in, then you'll see an explosive move happen again, like on the British pound news. Okay. So this is something that they have to do every week and they change it up every week. So like, for example, when I bring up that same New Zealand correlation that took place last week, this is the 4-hour chart. All right, so actually, let me go to the charts. So if we take a look last week, what do you see here on British Pound New Zealand? British Pound New Zealand did a W formation right here. W broke the neckline of the W and then dropped and dropped. This was a buyer trap. So if we look at that live, people would be buying that. So right at the same time, when it did that, we see that also Euro New Zealand did a neckline breakout, buyer trap. Then when you take a look at New Zealand USD, which is inverted, these were buyer traps. They did a slight, look how subtle this is. Slight seller trap. Doing this bearish engulfing. The bearish engulfing on the 4-hour chart gets a lot of people to commit to the trade. You see? So again, let's take a look at New Zealand Canadian. And look at that. Look at this shit. It cuts the low right here. At the same time, this cuts the low. And then you see New Zealand Swiss cuts the low right here. So check it, family. This breaks the neckline. This breaks the neckline. This breaks the neckline. That breaks under the low. So what took place on October 13th, there were a lot of motherfuckers trying to sell the New Zealand dollar. And this is a very clever observation on the 4-hour chart. So this is why I only take the breakouts of highs and lows and necklines now, and there's different variations to it. All right. So I'm currently actually now, I have a course on it and revamping it. And, what I'm doing is I'm backtesting, creating 150 examples going back 2 years, where we actually look on a week-to-week basis how to find the peak formation correlations that took place. So you're not really trading every day, family. When you see these correlations, what you're doing is you're just going to trade 4 to 5 New Zealand correlations. Like when we look at the breakdown on GJ, on British Pound today, which I believe there'll be a pullback, and then they may play around and it will continue, in my opinion. Okay. So I'm thinking again, they trapped buyers here from cutting that high, trapped buyers here, cutting that high, right? And then with the other two as well. So what I'm thinking is, okay, these are set peaks for now. I just gotta monitor it, see where it go from there. Right, hold on, got some people coming in here already. And just to go back to this markup, do you see how again it makes sense when you wait for a specific type of correlation, and this is especially the 4-hour chart. Okay, when they cut highs, break certain zones, the big hedge funds, they do this shit. And they do this every week because they need dumb money in order to place that big order. Okay. So once you understand that, and then if you look at this, going back to that example, remember that I started off in the other class when USD Swiss did this huge bullish engulfing. Cut that high. At the same time, USD Canadian do a huge bullish engulfing and breaks a key level. Well, not as big as this, but it does break a key level in a neckline. Then we have USD Yen just cut a high. Look at that. All of these bullish candles breaks that high, breaks that neckline, breaks that high, all at the same time. You know that what? This is, and they consolidate for quite some time. They actually do one more move up, right? And then they trap buyers and they drop. But then you see Australian USD did the inverted of the USDs, where it breaks that low, really getting sellers into the market. So this is why we see using bank trap correlation, which is what I coined. This is a classic pump and dump, but I'm only doing the 4-hour chart. Okay, that's it. I may go to the 1 hour for entry at times, but I only do the 4-hour and I'll take all of them. All right. Now, realistically, let's say I entered this, I entered that, and I'll enter 4 of them. If I entered this and have my stop loss up here, I might have got stopped out here, but I still would have been in the 3 other trades. It's hard to determine at times, because each one of them may move different. You see? So yeah, so I just take entries right when I see all of the correlations and cuts of the high, and then but my stop loss is a bit wider since it's the 4 hour, so it'll be like usually a 25 to 30 pip stop loss. So I would enter right here, short, have a stop loss there, stop loss above the high. Let's say I enter here, stop loss below the low. I enter here, probably would have got stopped out on that wick right there, but the other 3 would have been good. So, I spread the risk amongst the 4 pairs because sometimes you don't know, you don't want to like just bet on one and then, let's say you only took USD Swiss and you got stopped out. That happened to me before. So that's just the power. And this is a family. This is an entirely different type of correlation. You see, it's not at all what is usually taught in the industry. All right. When you think of correlation, the way they teach correlation is not what I'm talking about. This is looking at it from a whole nother perspective. And we're only using mainly the 4-hour chart, being an intraday trader, intraday mini swing trader. All right. So the main thing, it does take practice to even like be able to find, like, look, you see how what I do here, I go back, you see how they cut that high and then they cut this high here and they drop. And, so for example, and we would see, and this was like a little trend channel there. All right. And then I'll back test to see if other British pounds broke that high or low. You see? So the main thing to understand is this is a strategy mainly of quality over quantity. You see, that's the main thing. You're not trading like a bunch, every day, only when you see those correlations. And then so some trades I will have a take profit, while two other pairs I will keep it running. So how do you know if the reversal will take place in peaks, highs, or lows? It's just based upon the correlations. That's all I'm saying. So like, for example, when I go back to New Zealand, when we were looking at how the New Zealand broke this low right here, broke that low, that is a peak formation reset. It's not exactly a high of the week or low of the week. But when you look at this, for example, this was a induction trap that trapped so many fucking retail traders on a New Zealand dollar that is enough people on the opposite side to place a big institutional order. So it's not really about like high and weak and low of the week. It's just finding these synchronistic breakouts that happen together simultaneously to where an institution has enough people on the opposite side to place a huge order. And as you can see, this never came back. Never came back. Okay. So basically, and that's the main thing. So that's why I'm doing right now. All right. And it's for the price for the course and stuff like it's not even expensive. It's like it's cheap, because I'm not doing as much as what I did in the previous one. All right. How I used to do it. So I'm only trading once or twice a week. Sometimes I don't trade at all for the week. If I am not sure about the correlation, if it don't look that good. But when it looks this good, and then you could hold the trade, So let's say I take, a buy on this one. I take a buy on this, a sell on this, and a sell on this. I would have take profits on one, right? So let's say I have like a 20, 30 pip stop loss and I want to go for like 100 pips just to secure the buy. But then on these, I would just trail the stop, and just hold it and just let it ride. And can you imagine you enter this right here, right? Let's say you enter like right here with a 30 to 40 pip stop loss or 45 pip stop loss, and you just trail. The risk to reward is beautiful and it's strategic. You know why it's paying you out. You're not just taking a trade because, oh, I think it's a trap. You have a deeper understanding as to why you're taking it, because you're tracking smart money. That's what you're doing. Okay, and this is a beautiful example here, and it does happen. But you see, looking at a bunch of pairs ain't difficult when you be just using the 4-hour chart. If you're trying to do like 1 hour and 15, it could be a little more strenuous. I'm not saying you can't do it, but on the 4 hours, so if you have a job, if you're doing other things, it's actually not too bad. And you're only showing up on New York Open and London Open. You see, so. Again, like I say, I do think this is a peak formation high. Can I be wrong? Yes. But like I say, I think it'll pull back a bit and continue. We will see. But I'm just telling you the mindset, okay, into why I took the trade and to why this training, even if you've been trading traps, this current training, 4-hour training that I'm doing, it's like a boot camp, and it would really get you up to speed, all right, on how to really look. Even if you know of Steve Morrow and the peaks and all that, this is another level of fractional disparity. You don't have to count levels. You don't have to know any of that stuff. It's just really where you're focused on, all right, I see it break this high. I see it did this. But did it happen enough to where there were enough clean breakouts on a 4-hour to where it really would be, and it wouldn't be a trade that's worth it. This is worth the risk if you trail in your start. So, right now, like I say, this is just what I see possibly for British pound. Let's see how it pans out. So I wanted to do that class. And again, I got a few of my students that are in here that already, know what's up. But for anyone new, hope this makes sense. Hope you got value. If you want to take the boot camp, let me know. And, also with weekly analysis as well. So you don't only just get back testing, but you get live analysis too, much more live analysis. I'll do it sometimes in the free group here and there, but it'll be more consistent. And, we know people in the trap house. That's what we have a group chat called the trap house. They know that we usually do traps of the week, and Eric that sent that trend line trap, which is good. You see, you could get the replay, of course. So Eric, who's trading the style that, because I taught many traps. So you're not just going to get the new material. I'm going to give you access to the old material as well, so you could see. And Eric took this, and you could see from here, right? This is a beautiful trend line trap. Look at that bearish engulfing right here. Nice bearish engulfing. Induction one more time. So basically, family, that's all I had to show for today. I got a Shaolin Qigong session. Let me stop the recording.